Look at you, Kylo, making a meeting, baby. Now we're talking. There you go. Where's Mom? You can't be here by yourself. No, you gotta be here. All right, gang. Good morning. Thank you all for coming. Much better turnout. I don't know if it's Hatfield or me. I don't think it's me because you're stuck with me every week here. But I'm glad you guys came for Jeff. Really good stuff to talk about. But before we get to him, I noticed people walking around with their food. Lisa bought some really good stuff. She did. Patrick had a banana, yogurt, and a glazed donut. Dude. I don't. Whatever works, dude. Whatever works. Good for you, man. Good for you. But we'll get to this in a second here. Again, we're not printing out this stuff anymore. Download the QR code. The meeting agenda will be on your phone forever. Okay? And I would save it because there'll be times maybe 3 weeks from now, maybe a VA question comes up and you go back to the agenda and maybe it's the answer's there or a stat that you need to know from a month ago. You pull up our handout and the stats are there. So save them. I would save them if I was you guys. So no more printing. Next week, we're going to have a high-rise panel. A lot of you have been asking me and Wendy about high-rises. And we have an idea of what you're supposed to do, but sometimes just getting into a high-rise is hard. Really, just going to the front desk and getting the key, and then you look a little silly in front of your client. But Bill, Peter, and Fred have been doing it for a long time. Probably
there's only certain hours you can show.
It's a whole thing. Yeah. And each property is different, and 3/4 of each of their business is high-rise for most of their career. So all the properties in town, MGM Signature to the Allure, they're familiar with all of them. So make sure you attend that one. Due to scheduling, people are busy. And of course, our favorite home warranty rep today is Lisa Waldeck. And there she is, everybody. Lisa, come on down. Yay!
I'm glad you guys are talking about high-rise next week. I just want to talk to you guys a little bit. I'm going to add some stuff about high-rise.
Oh, real quick. An agent texted me yesterday, said one home warranty company doesn't do home warranties in high-rises.
So,
right?
Well,
I guess there is a thing.
They can do them. It's treated as a condo. However, a lot of the high-rise have their own contractors. They only allow their own contractors to do work in those buildings. So they won't let the traditional home warranty company contractors go into their building to do the work. So essentially, that home warranty is no good for that particular unit. With a CHOSA, the homeowner can use their own contractor, meaning they can use the high-rise contractors to get those repairs done and still go through the home warranty. So keep that in mind because that's the difference between the traditional home warranty where they have to use their own contractors and high-rise won't let them, and we do allow them to use those contractors. So that's really important to know on that. Again, Lisa with a CHOSA home warranty. Guys, I'm gonna talk about this till it's just burned into your brain. Free listing coverage. Please use the free listing coverage on your listings. If you guys are taking listings, you're going to get an email from me just reminding you that we have that service available for your listings. It protects the home during that listing and escrow period. It's really important because when it's 113, 117 degrees, there is no AC that is working properly at that time of inspection. The home inspector is going to note on the inspection that the differentials are off and have it checked by a qualified HVAC person. You can use the warranty to have that checked. It's going to cost the seller $150 for their deductible. Most of the time it's going to be a capacitor, it's going to be a fan motor, a leak in the refrigerant line. We'll save the homeowner up to $1,000 in claims during that listing and escrow period, meaning they don't have to pay that extra money on a house that they have for sale that they don't want to put any more money into. So just let me know when you guys want that listing coverage. I'll email you just a reminder that we have it. And then just reply back to that email saying, yes, enroll my listing and I'll get that taken care of for you. For the buyers, we do 12-month warranties, 18, 24, 36-month warranties. So you guys are out there negotiating, major seller concessions right now for your clients. Make sure on that settlement statement, you're checking to make sure all of those funds can be used. If it doesn't get used, it goes back to the seller. Let's increase that warranty. Let's upgrade that warranty to an 18, 24, or 36-month warranty to use that money up for your clients. As always, I'm available evenings, weekends, during the day, text, phone, email, whatever you guys need. And I appreciate you all. Thank you very much.
Lisa, everybody, there you go. Of course, I need to go off track for a second. How many of you are using Forewarn? Who doesn't know what it is? Don't lie. Raise your hand. It's okay if you don't know. It's all right. You can raise your hand. Okay. You got to use it on every client. Okay. And it's really simple. Just so you know, you just figure out where you log in. How do I log in, Lynn? Okay. All right. I go to log in.
You've used it a lot, actually.
Look! It saved all my stuff, big boy. Look at this, huh? Uh-huh. So I put in my my LVR login, and I get, of course, a code to everything is verified 14 times nowadays, right? Let's see if I get the, come on. All right, submit the code. All right, okay, 265, 901, bada bing.
We have a phone number for you.
No. I'm a transparent guy. This is not my phone number. I'm only kidding. This is me. That is correct. My middle name is James, in case you're dying to find out. I click this little button here, and I don't know why 11 phone records. I guess I've moved 23 times. I don't know. But here's the important part. Possible criminal infractions. How many? 0. Okay. So no one's going to show up and arrest me anytime soon. Okay. 2 possible court records. Let's see what they were. They're probably my bankruptcy and my short sale from back in the day. Okay. Some of you have had 3 or 4 of those. I know as a fact, but I'm only kidding. So that's what that is. Okay. And then I guess if I want to know how many cars I've owned or homes I've owned, properties I've owned over the years, that's what's there. But use this, okay? Because you're going to put one of our agents called me, hey, Tim, I'm meeting someone at a property. I don't really want to go. I want to refer to another agent. I said, well, why don't you want to go? I don't know. I just got a creepy feeling from the guy on the phone. So she went into Forewarn, and she ain't going to meet the guy. You know, I don't know what she found. I didn't ask her. But there was stuff in there that creeped her out. And she's just going to, let the guy find he didn't want to use it. He didn't want to get a buyer's agent. He wanted to only deal with the listing agent, if you get my drift. Okay, so use Forewarn, gang, please. It'll keep you out of trouble or give you information that I think will help you and who you're going to be meeting. All right, kids, bear with me here. All right, here's the numbers, gang. I'm going to go through all of these real quick because I really want to get to Jeff's stuff. Jeff's class is normally a 90-minute lunch and learn. He's going to condense it into 45, 50, 60 minutes, okay? But here's the numbers. The only thing that jumped out to me is that we almost have 11,000 total homes for sale. We're at 10,907. And if you go to the RJ business section, which I know you all do every day, there's an article in there, why hasn't Las Vegas home prices dropped like the rest of the country or something like that? And there's some explanation on why. Maybe you'll agree with it, maybe you won't. But we're not dropping where lots of the parts of the country are. So keep that in mind. That's last year in July. Congrats to Michelle and Angie. We've gone through these for 4 weeks now. So you guys all know who the winners are. We're not going to congratulate them too many more times. Happy anniversary, happy birthday. Okay, these are the new hires in the last 2 months. We have a school drive going on. Okay, I know it's a little hard right now for all of us. But, me and Suze and Wendy, we're going to go to the dollar store. Spend $50 or something and buy a bunch of stuff, or $100 or whatever. So if you guys want to participate, that'd be nice. The bowling is coming up in September. You guys are a big part of the bowling, right? ROC Title. So we have time to talk about that. I would recommend schedule every Wednesday at 10, every other Wednesday, reserve the one prime time, even if you don't attend the class, get the recording, because they always have some really cool speakers on here. Don't know, honestly, who Alex is, but I promise he's a really cool speaker, okay? But he's with a company called Real Grader, and they're one of our vendors in the back end, okay? So try to attend the class and participate. If not, at least get the recording, okay? Trends is back. We've talked about that. That'll be happening on the 18th. We all know about the tech forum. Hopefully all of you have signed up for both. Please sign up. Lee Dreisen will be here. Thank you, Sarah.
August 12th.
That is, Lee will be back. We love Lee.
Please, we need more signups, guys.
Yeah, we do. And then Mike Calvert, I guess, has nothing to do for the next 3 weeks, but he's doing a bunch of classes here. He's doing one in August, one in September, one in October, and these are all general classes. So they're not core, legal, ethics, these are that. Then we have the cruise. I don't know who has interest in going on a cruise. It turns out there might be a lot of us going. At least that's the talk so far. It seems
It's only
6 credits, correct?
and you don't have to take them both.
That's right. You don't.
You don't need it.
What's
Now remember this, if you book a cruise because you're taking CE, you can write that off.
Right.
It's really
that's the bonus to this, that you get to write off the whole trip. So if it costs you $1,000, you can write it off. Okay. So there'll be more details to come. It says reach out to Veronica Torres. I think you're better off reaching out to Mark Reyes in the Green Valley office, or if you don't have Mark, Wendy will kind of help you a little bit, but we don't want to get bogged down in being travel agents, if you get my drift. Okay. So, but I know me and Wendy are almost definitely going. So.
Would
Yeah.
you think it'd be better if people just reached out to you and then you kind of?
No, Mark's got it down, I think.
Yeah, so Mark Reyes in the Green Valley office
Mhm.
is coordinating everything. So I reached out to him and he's like, okay, which rooms, which level, like he's doing it all and just kind of putting it through, Royal Caribbean. So you're gonna be your go-to because he knows everything about what's going on there. I just read off the flyer and I just reached out to Mark. So everybody just reach out to Mark so he can kind of coordinate, because I think the more the merrier. With all of us.
Be a good time.
And maybe give Veronica a heads up. Maybe she's getting inundated with stuff, so maybe whoever did this, maybe put Mark Reyes there, because we didn't create the flyer. So whoever did, maybe get Veronica off, put Mark on there, makes our life easier. That's Rev Up. That's coming up. We have 4 more classes left, right? 5 more to finish that out. If you're new to the company, August 5th, hop on Zoom with me. You get a quick jump start on what the company does. You get to meet all the vendors. Jeff will be on there, maybe Sarah, Lisa, Nora, Stacia, John Morgan will be on there. So it's good for new agents to get a little background on the company and our vendors and all that stuff. Our digital training calendar, that's all the numbers down at LVR. We do that so you don't bother us asking us for phone numbers. No, I'm just kidding. Ask me anytime for a phone number. I got them all memorized, but you should have this in your phone. If you have to call MLS, Century Lock, or MLS or membership, you have trouble with your CE credits. John Morgan is in Alaska, I think. Carrie, where is he? Alaska? God, good for him. That's all stuff. That's right. Sarah is really not going to say much today, or Shane, I don't think, because we got Jeff in here. So let me go back to that first slide. So how many of you have dealt with veterans? Right? Okay. When I started 18 years ago, I was a loan officer before that. And for 4 years, all I did was VA refis. They were called IRRL loans, where it was a rate and term refi. I didn't know how to do a purchase loan. I just did refis for 4 years. It was great until crap hit the fan and, they all went away. I met Jeff probably around, 12, 14, 16 years ago through VA REP, the Veteran Association of Real Estate Professionals. Really cool organization, nonprofit. Were huge in town for a while. Then they took a dip, and now they're kind of coming back. I was involved in the education part of it. Jeff was actually the president of VA Rep at one time. Okay, so what he's going to talk to you about is something that VA Rep has been massaging and doing this class for a long time to get it, to the point where it's beneficial to the agents. And the cool thing about Jeff is that besides teaching the class, being the former president of VA Rep, he used to be a realtor. So he knows your pain, I think. I remember when I first dealt with a veteran, the veteran said, "So Tim, I can move into this house with no money down." Well, yeah, it's 100% financing, okay? And then I said, "Well, you need a earnest money deposit." "No, that's bullshit. What do you mean?" VA told me no. VA told me it's no money down, and I just, I can buy the house. That's what they all think. They really, really do. Okay, and then you hit them with closing costs and stuff like that, and they think you're misleading them or you're doing something fraudulent in some cases. Okay, so Jeff will go through a lot of the different things and how to handle these certain questions from the veterans to get them on your side, because it's a great niche. Do we have 2 or 3 bases here in town? 2? Creech and Nellis? 2.
Well, you have the Armory,
See
you
what's
have Nellis, you have Creech.
what's the Armory?
The National Guard.
Oh, okay.
We actually have 2 bases, one in Sloan and one out north,
Oh, wow.
North Las Vegas. Then you have Creech, Nellis, you have the reserve units, and then you have a Coast Guard auxiliary in Fullerton.
So I don't know what that means. I mean, I do, but but it's funny. When I was on VA Rep, I never served. My dad did. My dad was a Marine Corps Master Sergeant. So I felt like I served. I really did. I felt like I did growing up, son of a bitch. But I was called a patriot, right? Because I was not a veteran. So you were called a veteran, I guess, or I don't know what we called you guys. Marine Corps vet. So if you can join even though you're not a veteran, is my point. Okay, sort of like Women's Council of Realtors, a guy can join. NAREP, you don't have to be Hispanic to join. Okay, so the same thing with VREP, you don't have to be a veteran to join. Okay, but we decided to get Jeff. He was supposed to come a couple weeks ago. We messed it all up, but he's here. Jeff Hatfield, everybody. There he is. Woo-hoo. Open up your guy. Yeah, open up. That's yours, right? And
That's not mine.
no. I mean, yeah, that's it. And let me minimize mine, maybe. And yours should come to that. And then, Suze? Hi, baby.
I think we need to switch the HDMI.
Yeah, get the real. Yeah, so yeah, hit the settings. All right. Yeah, baby. The key to being a good broker is consistency and having Suzanne. I hit settings, didn't I? Yeah. It goes. Here, clip this on somewhere. Oh, that's for the thousands on Facebook.
Oh, nice.
And this can clip somewhere, put in your pocket, and here's the other gizmo. Okay? Bam.
Smooth transition, huh?
There you go, right?
Oh. All right, well, good morning. My name's Jeff Hatfield. I am with ROC Title. I'm also the National Legislative Director for VA Rep. I am the current past president. As of last year, my term was over. Our terms are for 2 years. And let me tell you, it is a long 2 years. I was putting in on approximately 20 to 25 hours a week of community service. I can guarantee there's nobody in this room who has done as many community service hours as I have. It's absolutely insane. Well, don't forewarn me. So, I'm also a published author. I've published 4 books. They're listed right there. This is all my contact information. I am also a military veteran housing certification, which is a CE 8-hour CE class. Has anybody taken MVHC? Oh, wow. It's an 8-hour CE class that we teach. Unfortunately, we didn't get approved yet, so we don't have any classes scheduled for this year. But next year, we're going to be bringing that back, and we're going to be adding a lot of the new stuff that we're going to be talking about today to the class. My partner in crime, Miss Sarah McMahon, everybody knows, right? You get up here. So Sarah's incredible. I've worked with her for a little over a year now. A little bit about me. I was a real estate broker for 23 years. Made the move over to title because of this guy over here dragged me into the title world, and I absolutely love it. Got to meet Sarah, and now me and Sarah partner together on the sales executive side, and we do a lot of stuff for our clients. So she can talk a little bit about what she does and introduce.
That's right. Absolutely. Good morning, everybody. Thank you so much for coming. Thank you, Jeff, for coming and teaching this class. I've been in this class before, very, very knowledgeable on this subject, and you will leave here with nuggets of information. I know Jeff is always willing to take questions if you have a problem or if you need any more information. And then, of course, when the 8-hour CE class that he mentioned becomes available, we'll make sure to have a flyer out for you guys as well. Obviously, being here in Las Vegas, we have a big military presence, and it's obviously a very intricate subject that you guys need to be aware of. So thank you so much for coming. I'd like to introduce our newest escrow officer, Desiree Wright. Yeah. She just joined our team, and she is amazing. Been in the industry for 22 years, but I'm gonna let her say a few things about herself. But we're so happy to have her here, and she is awesome. So she'll be joining me with a lot of events and hopefully a cruise coming up very shortly here, because I hear she's a cruise person. So Wendy is on board because we're working on Shane. Okay, so hopefully everybody can come.
Expensive.
Good morning, everyone. My name is Desiree Wright. I'm with ROC Title. I just started about 3 weeks ago. I'm a true escrow baby. 22 years in the business. I started the week that I graduated. I've seen every type of market. I've closed every type of transaction. I came over to ROC because of the culture, the people. It is just such a breath of fresh air. I can't tell you what it's been like, other than just an entirely different experience from any company that I've ever been at before. I'm really text friendly. I'll leave my business cards and my information is on the ROC. What do we have?
It's also on the screen here.
Yes, next one over here. There's me.
And we have her cards outside here, right outside the door.
Yep. If there's anything you guys need, net sheets, prelims, just title questions, not even on my files. If you have another title question you want to just pick my brain, I don't have any problems with that. So just give me a call, shoot me a text or an email, and really just super easy to get a hold of. So that's it.
We're happy to have you here.
Thank
Thank you
Yes.
so much.
All right.
Thank you so much for listening.
Thank you, Jeff.
Thank you. All right, so this is our escrow officer team. You met Desiree, and then we have 6 more. We have Jamie Newmeyer. We have 2 Jamies in the Green Valley office. You got Jamie Newmeyer, Jamie Lobby. And then out of the Southwest office, you have Kathleen LaMarche, a lot of you know. Brad Meringue, who is also a Marine Corps veteran. You got Miss Jennifer Wolf and Laura Meringue, and then you got Desiree Reich in our Southwest office. We're just down the street. So if you need to get a hold of any of us, feel free. Like she said, text friendly. I mean, we communicate well. Sarah's here in the office. Touch base with her. There's a lot of stuff that she can do as far as buyer net sheets, market trends, open house kits, social media content, listing flyers, just listed, just sold content, and all that kind of stuff. So if you need any of that, she is the one to go to. All right, we'll be hosting another class here on August 19th at the Realty One Group, Las Vegas. This is a class I wrote, Winning More Business with Net Sheets. And it's not, here's our app, our net sheet app, and here's how you use it. Here's a net sheet, how to use it in a listing closing. Here's a net sheet, how to use it in a listing price reduction conversation. How to use it as a buyer closing tool. It's more of a sales thing than it is here's an app, here's how to use it. Okay, it's very, very, very good class. I taught it at the Southwest, and they absolutely loved it. All right, little disclaimer. The goal of this Lunch and Learn is to educate realtors about the VA home loan benefit in order to serve their veteran clients better, write stronger offers. We're actually going to write an offer today. Be able to answer basic VA questions and avoid common mistakes. And there's a lot of them. This class is for educational purpose only, and should only you have questions about the VA home loan process, pre-approval, or qualification, contact your preferred licensed loan officer. All right, working with veterans. Who here is a veteran? Anybody in the room? Veteran? Thank you for your service. What branch?
Marine Corps.
Number 5.
Number 5.
All right, so working with veterans. I have 5 ways to find veteran buyers. Number 1 is build partnerships with VA lenders, veteran-friendly loan officers. Not every loan officer out there knows how to do a VA loan properly. I've had loan officers take my military veteran housing certification class, and it never fails. They'll come up to me and say, hey, I've been doing VA loans for 20, 25 years. I didn't know that. Excuse me, you've been doing loans for 25 years and you didn't know the basic stuff, right? So not every lender, if they say they can do a VA loan, doesn't mean they understand the VA loan, okay? Another one is build relationships with VSOs, veteran service organizations. There's a lot of them out there. There's about 10,000 of them out there. Veteran service organizations like your DAV, AMVETS, American Legion, VFW, and then the list goes on. There's a ton. Marine Riders. There's the Air Force has got a bunch of different groups and clubs that you don't need to be a veteran sometimes to go to there or sponsor some of their events. So that's something as a realtor you could do. Hey, you have an event, let me sponsor your lunch. Let me sponsor a breakfast. Let me sponsor whatever. You know, when they have their back to school drives or their canned food drives, be involved in that. If you want to find veteran clients, they're right there. They're right there for the picking. Host VA loan classes, first-time homebuyer workshops and seminars, and webinars. Webinars are a big thing right now. If anybody wants to put together a class, I'll help you with it. If you want to pick a location, like the library or maybe an HOA, community boardroom or whatever it is, and you want to host a veteran home buyer seminar, let's do it. I'll partner up with you. Okay. Next thing is target veteran-heavy neighborhoods, online groups, communities, and military installations. There's a lot of groups out there. It's what I like to call digital door knocking. Right? You have a bunch of these different online groups. Go in there, see the questions people are asking, and try to answer them in the chat. Create your relationships by doing that. Digital door knock. You do that with not just veterans, but any group. Create content about entitlement, assumptions. Everybody knows about assumptions. We're going to be talking about them today. Who knows about assumptions? Why are assumptions good? Assumable loan.
Are they happening more now, Jeff?
Absolutely, they're happening. They are. So I'm a prime example. I have a 2.5% loan on my house. Who'd like to assume that? Everybody. We're going to talk about how to do that. 5 ways to find veteran sellers, target veteran-owned neighborhoods, longtime homeowners, market value of available assumable loans. Who knows who is the largest veteran owner-occupied zip code in the country? It's here in Las Vegas. Anybody guess what it is?
89144.
89131. 89131 is the largest veteran owner-occupied zip code in the country. And then we can get into PCS, relocation services. There are some relocations where you can go through the qualification classes like MRP, or there's some other ones where you can get certified to be a military relocation specialist. So when people are PCS, or permanent change of station, so when they're moving out of or moving into Creech or Nellis, you're the one they contact. And usually it's roughly between January and June of every year. That's kind of PCS season. And always have a service mindset. You got to know the VA basics, which we're going to go over today. Communicate clearly, follow through, respect the mission and the family. A lot of the times, especially when we have our active duty service members deployed, who handles the stuff at home? The spouse. The spouse is the one who makes all the decisions. They usually have a power of attorney from the service member, and they're the ones who make all the decisions. They're the ones who coordinate the move. They're the ones who get the family to the next location. And being that realtor that helps them do that, you're going to be a godsend to them, because they are so stressed out at that time. You got to remember, now some of them have been in a while, they've got the down, but if it's their first PCS move, they're really stressed out. And for you to be able to take that burden off them and say, hey, let me take this, let me help you, let me help you find moving boxes, let me help you find movers, let me help you find this, let me help you do that. They're going to respect you, and they're going to refer you to every single person they know. All right. Nevada veterans and VA home loan. How many veterans do we have in the state of Nevada for a Starbucks card? Give me the closest gets this card.
15,000.
How many?
15,000.
15,000? 53,000. 75,000. I'll give 2 more chances.
22,000.
23,000. In the whole state of Nevada, we have
123,000.
122,000?
Yeah.
All right. 216,000. You're closest. We have 216,000 veterans in the state of Nevada. All right, for another gift card, how many do we have out of that 216,000? How many? 7 out of 10, but what's that number? Oh, come on, math. No. How many do we have? How many veterans out of that 216,000? How many of those live in Clark County?
Oh,
7 out of 10.
Well, no, it's the
Number.
Okay, so
140,000.
140 what? 151,000. I'll give you one as well, because you guys got the same number. You got the same number.
No, that was Brandon. He had the exact number. 151. What
Did you?
Yes.
Okay, I'll get you. I got you here. All right. So we have 151,000 here in the state of Clark, here in Clark County. That's 70%, 7 out of 10. Nevada VA home loan usage in fiscal year 2025, we had 7,803 total VA guaranteed loans. We had 4,800 of those were home purchases, 3,000 were refinance. We had approximately $3.5 billion in the state of Nevada in VA loan volume in the fiscal year 2025, with the average home loan of $458,000. Pretty good numbers, huh? Do you guys see opportunity there? There's a lot of opportunity, isn't there? If you have 216,000, 151,000 live in Nevada, and you only had 7,800 loan, I don't need to be a math genius to figure out there's a lot of opportunity there. Now in Clark County, we had 5,460 loans. Approximately 33 were purchases, 2,100 were refinances, and in Clark County alone, VA home loans closed $2.5 billion last year. It's a lot. It's a big niche. When I was in production, 80% of my business was veterans. Oh, I forgot the 70%. All right, evolution of the VA home loan. I got a little story here. It's really kind of how the VA home loan came about. So 1918, what was happening in 1918? The end of World War I, right? So we started having our veterans coming home from World War I. Remember, it wasn't like it is today where we got to deploy. We got to deploy for 9 months to a year, got to come home, maybe stay home for a year, year and a half, and then get redeployed. Back then, it was you go to war, you stay there until it's done. It could be 2 years, 3 years, 5 years. And if you get shot and you're not fatally wounded, they patch you up, they send you back. Whole different mindset, whole different way veterans were back in World War I and World War II. So 1918, we had our veterans coming home from World War I. They received $60 discharge allowance, a rail ticket home, and access to limited medical care. That's all they got. It wasn't until 1924 when Congress passed the World War Adjustment Compensation Act, or the Bonus Act, and then they gave each veteran $1.25 for every day they served overseas, and $1 for every day they served in the United States. That almost bankrupted our country. That was a big deal. Our government spent so much money doing that, they didn't know what to do. When I say bankrupted, you got to remember what's going on in 1924. Depression, right? I'm not saying that's what caused it, but it was a big factor in it, right? So 1944 comes along. It's the end of history, World War II. So 1944 happens. We start having our service members get out, and the government's like, whoa, wait a minute. We can't do this. We can't do what we did in World War I because it almost bankrupted our country. What can we do to give our service members something to show that we appreciated them, some entitlements, right? So President Roosevelt signed the Servicemen's Readjustment Act in 1944, providing low-cost loans to veterans returning from World War II. That was the GI Bill. That's what created the VA home loan that we know today. Now, it has evolved a lot since then. 1949, it had a permanent mission. So it took from 1944 to 1949 to make it permanent. Then you had the 1960s through the 1980s is what everybody, your parents or your grandparents, heard of as the dollar down VA loan. Everybody's heard the term dollar down, right? I still had clients, the Vietnam era clients and all that. Oh, I'm going to use my dollar down VA loan. I used it once, but I don't know if I can use it again because back then they couldn't. It was a dollar down and you could only use your VA loan once. Then 1992 came around. They took that dollar off and they made it a no down payment. And they eliminated the down payment requirement for most borrowers, and this was game changer. And then it's evolved even stronger in 2008. And then today, with the VA loan, and we're going to go over a lot of the stuff from 2008. Any questions? Why the VA loan is so powerful? Number one, there's no down payment required. There's no monthly primary or principal or primary mortgage insurance. Has competitive rates. There's flexible credit guidelines for another gift card. What is the minimum FICO score the VA requires for a credit? You can't answer, you know this.
No score. There is a warning. You can only win once. No score.
640.
I've only heard one right answer, and it is Shane Moody here.
Okay, I'm gonna do another one.
Okay. Shane Moody said no score. Do you know the VA has no minimum credit score? There is no minimum credit score the Veterans Administration requires for a VA home loan. 0. Now, a little caveat to that.
Value add to that, give that away. Add something else to it.
I will. I got questions.
I wanna keep it.
I got more questions. So a little caveat to that is lenders have what's called an overlay. So any lender that is originating a VA home loan, they can put their overlay, they have their own minimum score requirement that they put on the loan. Some of them are 560, some of them are 580, some of them are 600, some are 620. I've known of a VA loan down to 540. Now, is that risk has got to be mitigated there, right? You got to understand, why is he at 540? It was all medical bills. It was all medical bills from his wife who had cancer, who had passed away. Wrote letters of explanation to the VA underwriter. Underwriter understood. They approved his loan. That's the flexibility, the credit flexibility of a VA home loan. Very, very, very powerful. A limited closing cost, and we're going to go over closing costs in general. And it's also now, it has been for a while, but it is a reusable benefit. A veteran can reuse his VA loan over and over and over and over as long as he reestablishes his entitlement. And we're going to go over what that is here in a second as well. Any questions on that? Did I blow you away with the no credit score thing? All right, so whenever you start working with veterans, you're going to ask, do they qualify? The one thing that makes them qualify is they were either an active duty service member, they were a veteran who met service era character of service requirements, they were a National Guard Reserve member, and then also they were a surviving spouse, including specific spouses of service members who died in service or from service-connected disabilities. The lender still needs to do credit, income, and qualify. They need to make sure that they're stable, reliable, and they have anticipated income. The monthly debts or other recurring obligations. Residual income after major expenses, asset reserves, and verified funds to close, just like any other loan. Questions on that?
Hey, Jeff, I just hope everyone doesn't run to John Morgan and say, hey, Jeff said, no FICO score is needed, and do my loan.
Yeah, John will come up and, what do you tell these guys? To qualify for a VA home loan, it's just the same process as any other loan, except for the very beginning. You have to check your eligibility, or the veteran has to check their eligibility. Now, the lender, if you have worked with a lender who is VA, not approved or qualified, because they don't have to get approved or qualified, but if they work with VA, they know how to go check this. They can go to the VA portal and pull that certificate of eligibility. We're going to talk about what that is here in a minute. That's the COE. Then they get pre-approved with that lender, and then it works just like a regular loan. Locate a property, make an offer, get an appraisal ordered, underwriting review, get it cleared, closed, closing day, welcome home.
How long does it take?
Glad you asked that. Oh, I thought that was the next slide. We'll cover that here in just a second. About discharge status, what we want to talk about is to get a VA home loan, you have to have an honorable discharge. Now, there are some service members out there and veterans who have other than honorable, bad conduct discharges, that kind of stuff. Just because they have those discharges doesn't automatically mean they don't qualify for the VA home loan. There's a process that we can do. They can do a VA character discharge review, and they can have that discharge upgraded so that they would be able. Now, I'm not saying it's always going to happen, but just because you meet somebody who says, you know what, I can't use my VA loan because I had an other than honorable, I was smoking weed or something like that, I got caught, or bad conduct, or what we call it, the big chicken dinner, bad conduct discharge. You can go through this process, and they possibly could get that discharge status upgraded, right? And then if you tell them about that and you get them a loan, who do you think they're going to refer everybody to you?
And how long does, if they bring up that question, what's the process in that getting cleared or going through, that you can give them a heads up? You can go this way, but it means this amount of time.
Yeah, I mean, it's a VA. It could take 3 months. It could take 6 months.
Okay.
It all depends on their situation. I guess every veteran's different. But once you file it and they look at all, you get all the documentation. What I would say is I would probably have all your documentation that they want to upload it all at the same time rather than piecemeal it together.
Okay.
Yeah.
Are there any limitations on co-applicants? Are there any limitations on co-applicants for the loan for a VA member? Like, so if they're a young VA member, like, could they have somebody other than a spouse? Like, could it be a parent? Are there any limitations on co-applicants?
There is, and we're going to talk about that. Yeah, we're going to talk about that. Okay, the certificate of eligibility, which is the foundation of a VA home loan. So your lender that you work with or the veteran can get their certificate of eligibility. What it is, it's a form the VA provides. It shows them what their entitlement is, and we're going to cover what entitlement is here in a second. And how to get it, they go through the VA portal or VA Form 2680. It's easier if your lender does it. They can pull it right away. They can see what that veteran is eligible for as far as their entitlement goes. And then what is entitlement? Entitlement's the amount that VA will guarantee to help with the loan. And we're going to go over that. It's a little bit of VA math, which doesn't really make sense sometimes, but it's there. And then also we'll tell you if there's any remaining entitlement, because it is possible for a veteran to have 2 homes using their VA home loan. It's possible. Not really in Nevada because of our prices are so high, but it is possible. Okay, basic entitlement versus full entitlement. The one thing I want to say is basic entitlement is the dollar amount. And then full entitlement is the benefit status. There's two things there. Entitlement is the amount the loan guarantee the Department of Veterans Affairs provides to the lender. It is not cash paid to the borrower. It helps protect the lender if the borrower defaults. Basic entitlement is the first $36,000 of the VA guarantee. Now, when I say VA math, stay with me here. It is commonly shown as the certificate of eligibility, or it covers loans up to $144,000. Not saying that's the max. Covers loans up to $140,000 because 25% of $144,000 is $36,000. So you have this here. Now, if you go over, basic entitlement is $36,000. Bonus second tier entitlement is $144,000. So example, like I said, VA math, $500,000 home plus a $25,000 guarantee. He used $125,000 of his $144,000 entitlement, which means he has entitlement left over, which he could possibly purchase something else somewhere else.
Doesn't it have to be a primary residence?
Good question. Yes, it does.
So if they got stationed somewhere else.
So perfect example, my daughter, she just got out of the Navy just recently, within the last month. So she was in for 8 years. And so when she was stationed in Corpus Christi, we bought a townhome with her VA loan. Then what she did was she refinanced it into a conventional loan, which reestablished her entitlement, her full entitlement. Then she got stationed in San Diego, and she used her VA loan to buy a house in Imperial Beach. So now here I have my 28-year-old daughter who has 2 homes. One is over $1 million now because we bought it for $700,000. It's worth like 1.3 now at 28 years old. Now imagine if you had a service member that was a young service member, 23, 24 years old, newly married, and you pitched this idea to them, and they bought their house here And then all of a sudden, 3-4 years later, they go to Georgia, they buy a house in Georgia. 3-4 years later, they go to Texas, they buy a house in Texas. 3-4 years later, they get put in Missouri, they buy a house in Missouri. Now, 20 years later, they've got 4 or 5 homes. They've got millions of.
Refinancing after each home,
The best thing to do is, you refinance into a conventional loan.
and then you get your full.
Then what they do is the best way to do it is hold that home as a rental and only rent to military families around that base. Because the reason why is because if the tenant stops making payments, you contact the commanding officer, and all of a sudden, guess what? Rent's paid. Any questions on that? I'm going to send this all to you too, so you'll have it. You'll have it. All right. So another thing, part of the VA home loan is the funding fee. Everybody heard of the fund? Air just kicked on us. Feels good. Understanding the funding fee. So there's a funding fee that goes with the VA home loan. The VA home loan is 100% VA funded. It's meaning the VA runs this out of their own money. They don't use taxpayer money. Now, they don't fund the loan. Servicers are the ones who handle the money. I'm saying the program, the VA home loan program, is self-funded from the funding fee. And those numbers are, for the first time use, if they put less than 5% down, it's 2.1%, 2.15%. If they put 5% or more, it's 1.5%, so it goes down. If they put 10% or more, it goes down 1.25%. And then after first use, meaning their second, third, fourth time they use it, it goes up to 3.3. After first use, 10% down, it goes down to 1.25. Now, there's a great thing to this. If they have a 10% disability rating or more, that funding fee is waived. They don't have to pay the funding fee. And also, that funding fee can be placed on top of the loan. So not only do they get 100% financing, but they're also going to get that funding fee added to the top of their loan. So they don't have to come in with that at closing if they don't want to. Any questions on that?
Now, Jeff, compared to an FHA loan, is mortgage insurance, but that gets added to their payment every month.
Yeah.
Correct? Right?
Yep.
After $200 or $300.
Yeah. Yep.
That's a big hit.
Yeah. What is it? 287? Was it 286 bucks? Something like that.
That depends on the loan amount too, I guess.
Yeah.
But here, the funding fees added on top of the $500,000 loan.
Yeah, it's added to the top. Yep.
It's added on the closing statement?
It's added to because their loan is actually 100% plus the funding fee.
Okay.
Yeah. So if for your first couple of years, you look at you bought your house for $500,000, you got a $500,000 loan, whatever your funding fee is can be added to the top of that. So that would show on your balance of your mortgage statement. Yeah.
Finance.
Huh?
Finance.
Finance, yeah. How much can you borrow? What is the maximum loan amount for a VA home loan for another gift card?
No maximum.
Oh, who was that? I heard somebody said that. Who is that? There we go. There is no limit to the VA home loan. I know of a veteran, it was an Air Force colonel. He bought a house. He's part of an oil family, so he had the money. But he figured it would be a better way to use his VA home loan for $14 million in Texas. It's the biggest one I've ever heard of. What's that? Yeah, he was a colonel in the Air Force.
Is that the proper way to ask it? Like, what's your job in the military or what's your position in the military?
Well, it depends what service. Like us Marines, we say, "What's your MOS?" Right? Your military occupation specialty. Army has their own way. Navy has a rate, so they have different things. There's just different terms. In fact, I should add that to this.
That's a good thing.
Yeah.
I should add that to that. You go into how to get paid, like they don't get a paycheck. They do, but they don't call it paychecks. They EAS or ESP.
Yeah.
Some crazy thing
Yeah.
you guys call it. You know?
Earning leave or earning, what was it called? Earning leave statement? Earning leave statement. That's what it was. ELS. Yeah.
That's once a month they get paid?
Also
Every 2 weeks. 1st and 15th. Yeah.
Also, you're not going to be able to, if they're less than an E3 or E4, they're probably not going to be able to qualify for a loan because they're not making shit.
Well, it depends you'd be surprised what those pay rates would go up to. I know with BH, my daughter was in E6 when she got out with her BH. Well, this is San Diego. They were getting like $3,800 a month just to live. She's making almost $11,000 a month.
Wow.
A lot different than when I was in. I think I got $1,200 or $1,500 a month. All right, property types that qualify. You can use it for single-family residence, of course. You can use it for VA-approved condos, and I'm going to show you a couple of things because there are some changes recently with 21st Century Road to Housing that's going to change the way condos are used in conventional FHA financing. VA might be the best way to go if you have a condo, but a lot of condos aren't approved because of certain reasons. We're going to cover that here in a second. Townhomes, and you can also use it to buy 2 and 4 plexes, as long as the veteran occupies one of the units. So it's a good way for somebody who is at Nellis. And the only thing is our 4 plexes are probably not in the greatest part of town, are they? They can use it for manufactured home, modular homes. They can also use the VA home loan for construction. All right, so again, I'm going to send all this to you so you'll have it. How to get a VA condo VA approved. There are some criteria. You check with the portals list. I have the links down here. You review the requirements. It's pretty strict, and there's a lot of condos that don't qualify for VA financing because of the way the HOA is either ran, or there's litigation, or there are insurance issues, or something like that. But this is how to get a VA condo approved.
Now, Jeff, in most cases, the loan officer is doing that, not us. Or are we doing it?
Well, both. You guys are a team, right? So I would say, hey, we want to do this. Loan officer will check and see if that VA, I would probably do it before I even went to look at the VA condos, make sure that I'm not wasting my time going out to the complex when the thing's not even approved on the VA list. All right, so let's talk about the VA appraisal process. Who here went through the VA appraisal process? What do you think?
Termite special?
No, that's
Appraisal.
appraisal.
Yeah.
So there's a lot of myths out there that VA appraisal is horrible. It's bad. It takes long. It's false. False. They use the same minimum property requirements as an FHA appraisal. And here's the process. Lender orders appraisal. Let's talk about this too, because your appraisal contingency dates matter. How many days do you put? Somebody give me a date. How many days do you put for a appraisal contingency?
14 days.
How many? 14 days. What's another one? 21 days. 21 days is probably a better bet than 14. And the reason why is, so let's say it's Friday. I went out, I took Shane out. We looked at properties all day long today. It's 8 o'clock at night. And I'm like, I got to get this offer. I write up the offer, 8 o'clock. I submit it to Tim. He's not going to probably review it Friday night. So he reviews it on Saturday night or Saturday morning. Monday. Okay, he reviews it on Monday. Okay.
But you'll see Wendy on it, so it'll be fine.
No. So Wendy looks at it on Saturday. Forrest Tim says, "Hey, this is it. So by Sunday we got a deal." Okay, they sign it on Sunday. So I put 14 days on my contract. Okay. Escrow gets opened on Monday.
Are they calendar days or business days, by the way?
So let's use a date. So I'm going to use real easy numbers. So we got it signed. So Tim's client signed it on the 1st. Returned it to me on Monday the 2nd. What date does due diligence start? Or does all contingency dates start? What is acceptance date? He signed it on the 1st. He delivered it to me on the 2nd. When's the date? It's the 2nd. Date of delivery. In the state of Nevada, it's date of delivery. Signed it on the 1st. Deliver it to me on the 2nd. The date starts, day 0 is the 2nd. All my contingency dates are the date of delivery. Very big to know this, because if you get one day, you think you got one more day than you do, all of a sudden your contingency runs out and expires. And your client's like, what the hell, right? Very, very, very important to understand how those dates work. So now it's Monday. I send the contract over to the lender on the 2nd. The appraiser has 3 days to pull that out of the management, whatever management software they pull it out. They have 3 days to pick it up. Usually it doesn't take that long, but they have 3 days to do that. Then they have 7 days to complete it and return it. So right there, I'm already at maybe 11, 12 days, and I don't even know if the appraisal is going to come in low, if it's going to come in at value. I have no idea. So now at 14 days, I'm freaking out, and I'm probably going to have to do an appraisal contingent expiration addendum, right? Extending that date a few days. So 21 days is probably a little bit safer. At least that way you have those dates. Because then there's another thing too. Oh, I've got it right here explaining it all. So day 0, ordered by the lender. Appraisal assigned through on day 1 through 3. Day 3 for said properties inspected. 5 through 10, appraiser visits the property. Day 7 through 14, it's delivered back to the lender. Now, what happens on a VA appraisal when it comes in low? What's the VA loan got that no other loan has? Anybody know the term? The appraisal gap?
A 3-syllable word starts with a T. Anybody? For $1,000.
Actually, I have one more Starbucks card. Anybody know the term when a VA appraisal comes in low? What can be initiated that no other loan can happen? Tidewater. Tidewater. So the Tidewater Initiative is the greatest thing in the world.
I just have one. Oh.
Did it work out?
No.
Oh. So what Tidewater is, the VA appraiser goes out, does the appraisal, and he says, hey, he calls up the lender and he's like, hey, I'm initiating Tidewater. I'm not finding the value. You know, your house is listed at $400,000. I'm not finding the value. He's not going to tell you what that he's finding, but he's going to say, I'm initiating Tidewater, which allows you. So once Tidewater is triggered, it allows you to provide additional comps. It provides the buyer's agent and the listing agent. Typically, the listing agent, what comps did you use to price this property at where you priced it at? Prove to me. Maybe you have a comp that you use that me as the appraiser aren't seeing. You provide those two, and then he reviews it. He doesn't have to make the changes, but he will review it. I've seen both sides. More of they'll make the change than not, and then they'll issue the notice of value. No other loan has that second chance. So you as a listing agent, if you priced your property right using good comps, maybe the appraiser, and you gotta remember, these appraisers, sometimes they're swamped. You know, and that sometimes they have interns doing their stuff for them because they're out doing property inspections. So they have interns doing all the paperwork. Maybe the appraisers missed something. It happens. But the VA loan gives you that second chance. And then if property is still low, you always have to you have the option to renegotiate the price, request a reconsideration of value. The veteran has the option to pay the difference in cash or maybe split that with the seller. Or you can use the VA escape clause. So the VA escape clause is something that is very important when doing the loan, and you want to make sure that that is done before the appraisal. Some lenders wait, when do you get your escape clauses? Usually at the very end.
Oh yeah.
A lot of VA lenders. Well, what happens if your appraisal contingency is out of whack already? You want that VA escape clause addendum from your lender before he orders the appraisal. And what it says, it is expressly agreed that notwithstanding any other provisions of this contract, the purchaser shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase of this property described herein if the contract purchase or costs exceed a reasonable value of the property established by the Department of Veteran Affairs. The purchaser shall, however, have the privilege and the option of proceeding with the consummation of this contract without regard to the amount of reasonable value established by Veteran Affairs. So if your appraisal contingency is expired and you haven't reconsidered value, which you should never let your appraisal contingency expire, but if you do, you have the VA escape clause. They can get out of it. Now, this is only for value. You can't use this for any other reason like due diligence, where you can use any reason to get out of the contract. This is for value only. Any questions? All right, end time service requirements. There are some service requirements that a veteran, so active duty, you have to spend at least 90 days active duty, continuous 90 days active duty during wartime, or 181 days during peacetime. So right now we are, what time? I don't have any cards left. We're at wartime. We've been at wartime since 1990. They've never changed it. The VA never changed it. So anybody you have serving has been at war, has been served during wartime since 1990. Now that matters for a lot of reasons too, especially with our reserves and our National Guard, because they have to have 6 qualifying years of service in order to get their VA home loan. And when I say qualifying years, if Shane Moody goes to drill, I'm going to pick on Shane, he goes to drill, he's in the Army Reserves, and he goes to drill, you know, every 1 week in every month and his week during the year. But one year he misses his drill in the summer. That year doesn't count. They have to have 6 qualifying years, or they have to have Title 32 orders or Title 10 orders to active duty. So if they got, like our National Guard right now is being deployed to, I was just in DC for a week or so last month, and the National Guard's everywhere. They're running around in little 4-man units, patrolling the city. That's active duty. So if they can stay on that for 90 continuous days, they automatically now, they don't have to spend their 6 years. They automatically now qualify for the VA home loan. Another thing too with our good old Coast Guard. Coast Guard, same thing. The only thing is they only qualify for the VA home loan during wartime. Again, same thing, 90 days active duty, 181 days. Their 181 days don't count. The reason why is because the Coast Guard during wartime report to the Department of Navy. During peacetime, they report to the Department of Homeland Security, and they are a law enforcement agency, not a military unit. That's why. All right, we're almost done here. What's the difference between a concession and a closing cost? Concession is when a seller agrees to pay some of the buyer's expenses. I want you to really think about this. Seller's concession is when a seller agrees to pay some of the buyer's expenses. A closing cost is an expense required to complete the transaction. The VA rule, the value of a seller concession can equal as much as 4% of the selling price. Right now, it's really, really important to understand this because you're able to get this stuff from sellers because there's so much inventory out there, right? You can get 4%. Now, can you get 3% closing costs and 4% concession? You can. Yeah. So I can get 3% closing costs and I can get a 4% concession, maybe pay off the buyer's car, credit cards.
Jeff, I'm writing up the offer.
Yeah.
On the RPA where it says, somebody help me, I don't know the language, where we're asking the seller to pay some closing costs. Are we putting 7 on that line,
If you want to.
right?
Yeah.
That's what I'm saying. Okay.
Yeah.
Of course, in the RPA, there's no distinction between a concession and a closing cost.
Yeah.
You know.
Yeah, the lender's going to have to break that down. And then you're going to have to show what you're going to use that for. What's that 4% for? Are you doing it as a rate buy down?
So 4% is the max.
For concession.
But not include.
not closing costs.
Oh, so you can.
So would you just write that in additional comments and just put in there 4% concessions and 3% rate buy down?
Or you could put 3% closing costs in the closing cost field on the offer, or
And then put that in
Yeah.
additional comments.
Yep.
How much is the max for buy down rate?
that would be a lender question. I don't know. I don't know.
Do you think the loan officer is important in this?
Very.
Pretty much.
Your relationship with your loan officer is probably the most important relationship you have.
Is there a max on the VA loan for concessions? Because
4%.
no, I understand that. Like conventional and FHA, like you can only have a max of 6% contribution.
FHA is 3%, isn't it?
No, from the seller side.
For the seller.
There's a maximum amount.
Right, conventional, or is it conventional 3%? Conventional 6%.
6%. Right.
And then
So you can
FHA is,
do a maximum of 6%.
I think FHA is only 3%.
Oh, is it only 3 for FHA?
I believe so.
That's
Been,
a lender question.
it's been a while.
Remember, stay in your lane.
Yeah.
Yeah.
Again, that's why that relationship's so important. So with the VA, you have allowable and not allowables. So allowable fees are the veteran can pay under VA guidelines for the appraisal compliance fees, recording fees, tax assessments, hazard insurance, title exam, title insurance, VA funding fee, reasonable discount fees. They don't allow application so if the lender is charging a 1% origination fee on a VA loan, find another lender. But if it's not being charged, then the veteran can pay all these.
There's always been a gray area. Desiree's not here. I put her on the spot about a transaction fee. Can the veteran?
So temporarily, as of right now, this right here. So under the circular 26-2414 change, because of the NAR lawsuit, the Veterans Administration had come up to allow veterans to be competitive, right? So under that NAR lawsuit, which is a lot of buyers are being able to pay their agents' commissions, right? Whatever that might be. With the old way before this, a veteran can't pay their agent. They couldn't pay their brokerage fee. So they came out with and it still says temporary. I check it all the time, but as of right now, they can pay their agent. That's why I have temp. They can pay their agent fee. They can pay the broker transaction fee. They can also pay the transaction fee, PES fee. Anybody can pay that. The buyer, termite, and all that stuff. It always killed me when I would write a VA offer and the seller would be like, I'm not paying the transaction fee. I'm like, dude, it's $75. I don't know what they are now. What, 90 bucks? No, termite fee.
Yeah. It's
115.
Yeah, got up a little bit.
Oh yeah, no, my brokerage fee was a lot more.
But yeah, so back in the day, if you guys have, some of you are new, if they discounted our commission or we had transaction fee, our buyers could not pay that if they were VA. So you write the offer and if it gets counted back to you, you're incurring that cost, right? So then when that lawsuit hit, we were all freaking out. We can't help our veterans. So then they passed this, and so now the veterans can come up.
Yeah, they had to allow the veterans to be competitive. How are we doing on time?
So the commission is charged on the concession and not on the closing costs?
So a concession is something the seller's going to pay for the buyer.
So
Something you're asking to pay for is
so the commission is part of the concession if
it.
they have to pay.
No, commissions is not a concession. No, that's
Part
something.
of the
Yeah, commissions is not a concession. That's something completely separate. If the seller's paying the buyer agent commission, you mean?
yeah.
Yeah, that's commission. That's not a concession. Let's pass that. All right, writing a purchase offer in Nevada, same thing as writing a regular offer, except I'm gonna test you guys here. I think I got this from you, Tim, years ago, how to write this. All right, so we got our residential purchase agreement. We've got a sales price of $450,000, $5,000 EMD. What am I putting here? So I go down VA. What am I putting here?
The loan amount. Yeah.
$450.
How much?
$450.
Slide and see. It's 100% financing. 450. You're thinking of FHA because a lot of agents, and that's how I catch you all doing this, is they take the EMD minus, and then they put that as a loan amount. It's 100% financing. So now I've got $450. I'm getting a loan for $450. I have $5,000. What do I do with that $5,000?
Put it all in black.
I put it as a minus sign or a parenthesis sign down here in line F, which is telling escrow this is to be used either in the transaction or be refunded to the buyer at close. So many agents get that wrong. In fact, I was teaching a class at Northwest, and in the class, one of the agents got a VA offer. We were looking at it. That exact thing happened. They deducted the earnest money from the loan amount.
So what do you say to the veteran when the veteran says, so I'm giving you 5,000, right? But I thought it was 100, no money down. 100% financing. So you get guaranteed I get the 5,000 back.
So that 5,000 can be used as closing costs or
Talk to your lender.
Exactly. That's my point. The lender. Yes.
Yep. So, and then 450 at the bottom. All right, let's get into assumptions. Assumptions are big, especially right now, because there's so many sellers, and I've got my own opinions on what's going on in the market. I mean, we won't get too deep into the weeds on that one, but you've got how many homes? 10,000? 11,000 homes. That's, and then you've got what, about almost 4 months of inventory? Pretty close. Now, one reason I think the market is where it is there is a lot. There's a lot of homes out there, or a lot of sellers out there. It's very speculative. Sellers are, you know what? I'm going to list your home for $600,000. Come list my home for $600,000. I know it's only worth $5,000, but if you get anywhere towards $6,000, we'll sell. There's a lot of that out there. There's a lot of agents that are, number one, they want the business. They want something to market. Or they're too scared to tell their seller that there's no way your home's going to sell for $600,000. I'm not spending my money marketing your home when it's $100,000 overpriced. There's a lot of that out there. One reason why I think we have a very large inventory of homes, and a reason why values aren't coming down. But out of that group, there's a lot of homes that have 2.5% interest rates. There's a lot of homes out there with 3.25%, 3.5%. If you find a listing, that's gold. If you find somebody, especially someone who is older, who doesn't ever want to use their VA loan again because they're moving into assisted living, gold mine. I got a $400,000 offer, or I got a $400,000 house to sell at a 2.5% interest rate. It's going to sell like that. And the way that works is, okay, $400,000 house. Let's say I have $150,000 equity. I'm going to market that home as a 2.5% interest rate, whatever the interest rate is, assumable. All you have to do is come in with the $150,000 equity in cash, and you can move into this home. Okay.
Start up a loan. I mean, when you do that.
That's the only way it really works, though, because if you had to finance that and you only have 5% to put down, your second mortgage is going to eat up with that 2 or 3%.
There is a way to finance that. Yeah, there is a way to finance.
Sir? Sorry, you're not looking over here.
Oh, sorry.
I didn't mean to be rude. Is there a way to roll, like kind of like an exchange, a 1031 exchange, to roll equity for that $150,000 from a previous loan into the next house?
That's a good question.
Without having to actually pay capital gains tax, and if so, is it a state by state basis?
Ooh.
Another lender question.
That's a 1031 question for sure. What do you think, Tim? So the question is, on an assumption, I got a $400,000 house, 2.5% interest rate. Come in with that 150? There's 150,000 equity. Can a 1031 come in with that? No, it can't, because it's got to be an investment. It's got to be an investment property.
Well, is there just a way to roll one equity into the other?
You can't, because this has got.
Instead of having to cash it out, pay taxes.
It's a VA. It's got to be owner occupied. It's got to be owner occupied. It can't be an investment. So 1031. That's a good question, though. got me thinking. I'm thinking,
Sorry, I have a question. If you assume the loan, don't you have to pay off the previous owner's loan for you to carry on with the?
no, you're assuming it. So the way this works, and we're going to get a little bit in this because we're running a little bit out of time here. So a non-veteran can assume a veteran's loan.
Yes.
But that veteran's entitlement that we talked about, that $144,000, is tied up into that house. And then if that person who assumed it for defaults or forecloses, that entitlement is now at risk from the veteran who allowed the assumability. It's a risk. Now, if another veteran comes in and wants to assume that loan, then what you could do is you could take his entitlement and do a transfer of entitlement. So you take from one veteran's, keep the interest rate at 2.5%. You put another veteran in there, right?
For the current rate.
No, that's 2.5%. He would just assume as long as that veteran comes in with the money for the equity.
The balance is for the current rate.
Yeah. Yeah. Everybody get that? Any questions on that?
So would that seller now be able to buy another home even though that loan's out there?
Yeah, because what that would do is reestablish the person's entitlement so they can go out and use their VA loan again. Yeah. All right, real quick, I have about 5 minutes. VA updates. Again, I'm the National Legislative Director, so I just got back from DC. Actually got to sit on the Senate floor and watch the 21st Century Road to Housing Act. Everybody heard of that? Largest housing bill, largest bipartisan housing bill of this century. Huge. You guys need to really research that. That's going to change a lot of your guys' jobs. So one big part of it, there's a bunch of different legislative bodies to that, but one of them was the VALID Act, something I've been working on for 6 years through VA Rep. Over 759 congressional appointments in the last 6 years I've had on this. Tim, you were a big part of this too. So back in 2018, we needed to have a question put on the 1003 loan application. Did you serve? We are the organization that did that. Unfortunately, they put that below the signature line. We weren't able to collect that data. And what it is, it tells any lender out there that's making a application, it makes the veteran self-identify if they've served or not. So now the VALID Act, which was included in this, puts that question above the signature line, allows us to collect all that data, how many lenders were steering, and I say that lightly, we're steering veterans into FHA and conventional products. What it also does is it now mandates that every lender, when they do select yes, I've served, will spit out a side-by-side comparison of the VA loan, the FHA loan, the conventional loan, side-by-side, let the veteran choose what loan is best for them and their family. But I would definitely, this became law July 11th, 2026. Funny story about this. We were in the gallery watching this being voted on. Everybody knew who John Fetterman is?
Yes.
Senator. Yeah. So to be in the Senate chamber, you have to have a tie on, shirt and tie. He comes walking up, the ushers open the door. He's in flip-flops, basketball shorts, and a hoodie and gives us a thumbs up. That's how he voted for that bill. Wow. Crazy, right? Wow. I'm also in the middle of, I'm almost at the end of it. I'm creating the VA guide, VA Homeland Benefit Guide, which ROC Title is going to be sponsoring. It will have all this stuff in there, and it will also include a Nevada Veteran Resource Guide. This is all the phone numbers for anything you have a veteran or they need any phone numbers. All that stuff is going to be there, and that guide is something to give to your veteran buyer.
And you have it available?
Not yet. It'll be soon. If you all want to scan that QR code, put it in there, and I will put your information in there. And then as soon as I have it ready, I will send it out. It'll be in digital form, and eventually we'll have them printed too. So, any questions? It was a pleasure. If you have anything, reach out to Sarah or myself, and we'd love to help you. So,
Good stuff, guys.
Great.
all right, thank you.
The veteran client is an incredible niche. It really is. If you do 2 or 3 of them and then you pursue them as a referral, keep in touch with them, social media. I remember back in the day, me and another buddy, we went to a VFW post where my VA guy goes after he bought the house. And we shoot pool with him. And we get to meet all the other veterans that are in there. So it's a really good niche if you do it the right way. It really is. So, Jeff Hatfield, thank you again, big fella. Thank you guys. Today, anything? We're good? Good? All right. Oh, we gotta pick a number. Yes, we gotta pick a number. How are we gonna do it?
Well, hold on, getting that QR code. Sorry, I have it, so you pick a number, so hold on. Oh.
I'm picking your number?
Yeah. Suzanne sent it to me.
Where's the list?
Oh, no.
Should I pick it off the list?
Yeah, look at the, you can't look at it. Okay, go ahead.
Number 2. Oh, you won, Mike?
No, hold on, wait, I gotta find it. Where'd she go?
Let's get to
Oh,
this.
here, hold on.
Number 2.
No, hold on.
Where's the number 2?
I gotta, there is, but hold on. You sent me the list, but now it's gone. Hold on. Oh, sorry.